Hi and welcome to the channel. Today we are actually going to do something different. We are going to check a subscriber portfolio. Barman was very kind to send his portfolio and he asked in the comments if we could take a look. So here we go. We are going to evaluate the risk, the growth, the dividend, the valuation, and also the diversification of his portfolio. And of course, this is mostly for entertainment purpose only. I'm not a financial advisor, so this is just for fun, and I'm just going to give my input of the combined knowledge I have been scraping up during my investing journey. Okay, so I have actually put Barman's portfolio into a spreadsheet so we can easier evaluate it. There was some European stocks and UK stocks that I have some trouble getting data from, so I had to exclude them. Have that in mind. Overall, I am very happy to see that Barman has a lot of holding in his portfolio, over 30 holdings. Here we can see first at the column here that the beta of the holdings are actually below 1. So that means that his stocks on average are less volatile than the S&P. So overall, very nice for the low beta. Otherwise, you have to have a really strong stomach for stocks going up and down like crazy, and it's also less risk. For example, we can see Pepsi with a very low beta at 0.56, and lately VF Corp has been plummeting down and has a beta of 1.44, a bit high risk. Next up, let's take a look at the earnings per share for the past 5 years of the holdings. Here we can see actually a very nice number of almost 21%. So the average stock in Barman's portfolio has a very nice earnings per share growth. And it's important to take into account so you just don't strive for a very high yield, but also companies that are actually growing and not very stagnant. Very nice, Barman. You have companies that are actually growing in your portfolio, so it's also a great thumbs up for the earnings per share. Next up, we have the dividend. And the average company in the portfolio has a dividend of 4%. So this is quite high. Of course, it's gonna be high when we are focusing on dividend portfolios. The average dividend for the S&P 500 currently is about 1.8%. So this is more than double up. And I think it's quite impressive to have a high dividend, a high EPS, and a low beta so far in the portfolio. So yeah, I'm very pleased with the dividend being about 4%. I would say the sweet spot for dividend portfolio at this time is about maybe 2.5 to 5.5%. So good job, Barman. Your portfolio is generating a lot of income for either you to live on and pay your bills or reinvest into more dividend companies. Next up, we have the valuation, and the average PE is about 21. It's a bit high maybe. The average right now for the S&P 500 is about 18. But this is just to see that the PE is not too low, because if it's too low, it's also there are not that high expectations on the companies you are investing in. And we can see, for example, that Intel is having a very rough time. They are greatly spending capital on new factories and suffering on their earnings. But PepsiCo is a really sought after stock these times, where consumer defensive just makes sense with all the recession and other troubles in the world. This is just to be so we are in the ballpark for the portfolio, so it's not very overvalued or even too low. And for the last, we have the sector allocation. And to the right here, we can see I have created a graph. And the filled in pillars are actually Barman's sector allocation for his portfolio. And the dotted ones are for the S&P 500. So here we can see if Barman is in line with S&P 500 or way out of line in some sectors. Overall, there are pillars on almost every sector. We are just missing out on communication services, and this is for companies like AT&T, Verizon, Comcast and so on, and also for utilities, where we usually have maybe Southern Company, Duke Energy and NextEra. But overall, I think it looks incredibly good to have so many different sectors where you are investing in. It's quite a lot in consumer defensive and maybe healthcare, but I would say consumer defensive and healthcare are actually very nice sectors for dividend stocks, so I wouldn't worry too much on it being your main sectors. Maybe put some more weight and focus on technology. And I think you are not missing out that much on communication services and utilities. Usually those type of companies are very stagnant and low growing companies and are more an income play if you are soon to retire or already retired. So that is also a big check mark for your sector allocation, Barman. And overall, I would say that both for risk, earnings growth, dividend yield, valuation and sector allocation, you are hitting 5 out of 5 with this portfolio. Once again, thank you so much, Barman, for sending your portfolio to me to evaluate. And if you either want me to check out your portfolio, please link it in the comments below or send an email. See you soon.